You need energy to have civilization. You have less energy, you have less civilization. If this goes on much longer, if you get oil $200 a barrel, you inevitably cause some kind of global reset because the rest of the world can't afford it. And when the Straits of Hormuz are closed, countries that have become accustomed to having certain levels of energy are getting less energy, or it's costing them a lot more money. It's not sustainable. It's untenable. And I think if you do find yourself in a place where we decide to suspend exports, sort of go into that sort of turtle mode where we will do our own thing, it's going to cause serious consternation among allies, everybody.
We're back with another Bitcoin Policy Hour. We skipped last week. Apologies again. I will stop doing that at some point, but we're back and got a good agenda to go through today. As usual, joined by Ken and Zack here from the Bitcoin Policy Institute. Zack Cohen here as well, also from BPI. And we've got a long list of topics. So I think we're going to move a little bit quicker today. Ken, this is your bread and butter. We put out a state of play this week about Bitcoin in the Indo-Pacific region. I'm curious, A, were you involved in writing that? And B, what are the kind of key takeaways?
Yes, of course. Yeah, I was. I think a lot. It's interesting. The landscape, even sort of how we're thinking about China, has changed this week when the president postponed the long-awaited summit with President Xi. I took that. I think a lot of people did as an indicator that I think his plan was that to have the Iran war done before he showed up in Beijing to talk to President Xi, and to have that as part of sort of the bargaining for the whatever sort of grand deal. I know his aspiration is to have a generational agreement with the Chinese on the breadth of issues, security, trade, tariffs, all that. And the fact that he postponed the meeting, says to me, well, certainly the war in Iran is going to last longer than the end of this month. So that was a bit of a that was no surprise that it happened, but it's not particularly encouraging. Because again, I've been tweeting about this. Like this is meaning I think is still the most important meaning of his presidency. This is having some kind of grand bargain with the Chinese that outlast that makes sense, that can outlast one presidency is really important. And I think that the fact that's been postponed means that the circumstances to be discussed are not yet settled. And of course, things that are unsettled are always a little bit unsettling. So we'll see what happens. Yes, but our thought on the piece we put out was to, and we've talked about it a lot, but to restate our belief that Bitcoin is a critical tool in the overall monetary geoeconomic competition with China. There are some examples in that piece of proof that the Chinese, on some level, have, at least in the past, viewed Bitcoin as that. I recommend this to a lot of people to read Roger Huang's book, What About on Bitcoin. Roger's a really good guy,
yeah,
but
awesome.
I don't think a lot of Bitcoin. He's a good guy. I don't think a lot of Bitcoiners really understand the role that a lot of Chinese played in the early days of Bitcoin. And I think the fact that China, on some level, chased Bitcoin out of China reflects, I think, the sort of the latent threat to their governing model that Bitcoin presented. Or else why would you do that? They could have played a dominant role. I think they played certainly an outsized role in the early days. And again, I recommend Roger Huang's book because he does a great job sort of walking you through that. And some of these figures are around today. But yeah, we cited, for example, the recent seizure of 127,000 Bitcoin from the sort of scam infrastructure in Cambodia as an example. Not to mention that there were Chinese government officials named the indictment, but the Chinese put out actually a piece about a competing narrative about where those coins came from. But point being, though, that they viewed those coins as somehow theirs or belonging to a Chinese entity. And I think the subtext was that this was their cybersecurity agency, but they'd like them back. It's 127,000 Bitcoin. So I think as we kind of walk through, we're thinking through on the national security side, on the national defense side, how do we continue to highlight the role that we think Bitcoin is going to play in monetary reset? And this piece was just sort of we've talked about it a lot. I think, Matt Pines a couple of years back put out what I think was the foundational view from BPI about monetary realignment, Bitcoin and the dollar and what that all means. And I think we are, that was 2023, I think it was, maybe 22. It was a while ago. Things have changed and it's time to update it. So this was sort of our initial stab at taking a thought. There's a lot going on the national security side, on the foreign policy thinking side, that we're sort of wrestling with right now about kinds of recommendations we want to provide to policymakers. Point is, though, we're still getting a lot of questions from policymakers about how Bitcoin can be used, and sometimes it's not even how it can be used. It's how do its properties affect what we're trying to do, which is a very subtle difference, right? It's not like it's hard to use Bitcoin in the sense that you can own it and do stuff with it. But there's a lot they're thinking through now, like how do the sort of like inherent properties of this protocol and what it allows people to do affect how we should think about certain things. And it's an extension of this sort of the debate inside Washington about national security. National security is used as a club a lot about against Bitcoin because of AML issues. But the fact is that national security defined in the most narrow way possible. National security simply as the ability to trace, monitor, surveil, to use the tools of power to affect someone's ability to use the network. But there are people who have this broader thinking about this that national security is economic competition, is economic security. There's all kinds of things. It is not that, the ability to freeze money is a tool. It's a screwdriver. Economic competition is national security issue. But like everything else, I think everything gets confounded. But we're making the point though that there is a strong case to be made for a dollar Bitcoin partnership in a role where the administration has it's their policy. The reason the Genius Act exists is not so you and I can use stablecoins; it's so the world can use stablecoins. But that does not change the fact that there is going to be an evolving appetite for holding sovereign reserves that are held at the pleasure of somebody else. I'm referring to treasury bonds, but other things as well. And we're in a world where the digital dollar is increasingly prevalent. You can very easily expect to see a digital reserve asset becoming a, if not preferred option, a sort of seriously considered and maybe secondary or third option. I think states are going to continue to hold all kinds of things until there's some kind of global reset. But I think increasingly they're going to choose Bitcoin, and just I think the winds of policy are encouraging that. And I've heard nothing from people that actually matter in the policy space to lead me to believe that is not a desired outcome on some level.
Thank you. That was thorough. I want to bring up changing notes here a little bit. I want to bring up a funny tweet that I saw. And we'll talk a little bit about Iran because I think our audience is probably curious on your thoughts on that as well. This is a tweet from Gort, who works with Blockspace Media. It says, "Why don't they just tokenize the oil in the Middle East and transport it across permissionless financial rails, thereby avoiding the Strait of Hormuz altogether?"
That's amazing.
Oh man, I saw that tweet and I was like, "This is fantastic." I have to say this, while we're recording.
It's well done. Well done.
Yeah, curious, kind of where you think things stand. I know you mentioned it a little bit at the start of that, conversation about the state of play, but sounds like you're not bullish on things kind of coming to a quick end here. And I'm sure folks would like to hear your kind of market outlook as well, because obviously oil is a major kind of component in this.
Yeah, I do love. That's good because there is a lot of talk, and I actually think there is a role for tokenized real-world assets. But owning an oil token, and that's sitting, in the Emirates doesn't mean you can get any, because you can send it to me. Doesn't mean I get the oil in return. So that's actually kind of funny. So I think there's been some. I'll start here. So I some of the listeners may know Doomberg. He writes on his Substack, writes on energy policy. I've subscribed to him for a while. I the energy sort of sector has always been of interest to me because I think it's a key thing for national security. And he's written his writing. I kind of subscribe to his view of the world. I think that the escalation, we denied that we were involved in it, but the escalation this week when Israel attacked the the Iranian gas fields, and the Iranians, actually a joint gas field held with Qatar, and the Iranians responded with attacking a Qatari natural gas LNG facility. To let you know that the conflict's not ending. We're in an escalation phase. We're not de-escalation phase. Again, I think that once the president canceled his summit with President Xi, that to me it was okay. We're not de-escalating anytime soon. The problem with starting fights is like you can decide not to fight, but the enemy gets a chance. And the Iranians have up until now been quite stubborn with their demands. They want reparations. They want all kinds of pledges. The things that simply like. Well, I mean, we're not going to do it, and there's no way the Israelis are going to do it. So where do we go from here? I wrote this on Twitter this week. I mean, for me, it's hard to sort of wrap your head around the fact that we've almost been here many times in the past. Like we've had a lot of near misses with the Iranians. This war has almost happened more than a few times. And once the first bombs were dropped by the Israelis in the 12-day war, and the die was cast. This was going to happen whether people wanted it to or not. And the president made a calculation that if it's going to happen, we're going to weigh in and try and make it happen favorably. So I will sort of go back to where Doomberg's head is on the oil crisis. His contention, and it's interesting, is that North America, he calls it Project Turtle. North America could essentially become hydrocarbon independent on all things across the hydrocarbon complex, plastics, fertilizer, all the things that you make with oil. It's not just filling up your massive SUV. Oil does other things, right? And that sounds like a good thing, and it is a good thing, but it leads to possibly other. It opens the door for people who have sort of more aggressive visions of where the world should go to sort of provoke that. His contention, and I kind of believe him, is that if this goes on much longer, if you get oil at $200 a barrel, you inevitably cause some kind of global reset because the rest of the world can't afford it. There's already, China, for example, I read today has about 700 days of oil reserves, so they're prepared for this. It's not good for them, but they're prepared for it. I think South Korea has 200 days of oil reserves. I think you're already seeing in Southeast Asia countries there's already shortages. The world depends on, we'll say this, global oil markets depend on the Strait of Hormuz being opened. We are a large producer. We have the good fortune that most of our heavy crude comes from Canada. Whether Mark Carney likes it or not, we're in this fight together in this regard. But the idea being, though, once the world sees and we establish the fact that the United States can create its own turtle, sort of as Doomberg calls it, what is to prevent either any actor from triggering what could be a global reset of the geopolitical system? Again, his contention is that this is inevitable. I think a reset's inevitable. It depends, what kind of reset it is. So I do think that every day that this conflict extends, and every time oil clicks up, there's like a $50 spread now between WTI coming out of the United States and what you pay for what the Saudis are charging, for example, or certainly what the Emiratis are charging. That's just not sustainable for the rest of the world, and the rest of the world can't put up with it forever. And I think if you do find yourself in a place where we decide to suspend exports, sort of go into that sort of turtle mode where we will do our own thing, it's going to cause serious consternation among allies, everybody, because again, the big economic engines of the century now in Asia need this oil. Japan doesn't doesn't produce a liter of oil every year, right? There's a deep, persistent need for oil to flow through the Straits of Hormuz, so that oil markets are balanced, and that these economies in Asia are able to get their oil. And absent that happening, countries are going to have to make decisions. I don't know the decisions. I'm not being prescriptive. I don't know what that looks like. But they're going to have to make choices: either face massive unrest inside their own countries, or do something else. Every government in the world will probably choose to do something else. So I think this is why I'm coming around to the conclusion. I'm fairly sure. I'm pretty convinced that we can say pretty convinced. It's pretty unique. I believe is probably a better way to say it. that we will have some kind of ground presence in in Iran, whether it's like either taking Kharg Island, their oil depot, or occupying one end, the Iran side, the Straits of Hormuz. Because I think people recognize that this can't go on much longer. Because of the nature of our oil markets and the fact that we're not really energy independent, but we have energy dependence on some level. We're not feeling it. Gas is a little more expensive, but just open up a newspaper and Google like Thailand or anywhere in Asia. Not the case. Not the case at all. South Korea, for example, right? And again, China and China, of course, also is a major exporter of oil products. This didn't get much attention, but they banned the export of petroleum products, like refined products, right? China banned the export of that. That's kind of a big deal. So I think that every day this goes on, nothing happened. Every day this goes on, we run the risk of a more profound sort of bounce back. Because this energy is the key of all the talk about financialization and AI and everything we talk about. Like, end of the day, like energy and civilization are like they are directly correlated, right? Mm-hmm. You need energy to have civilization. You have less energy, you have less civilization. You have more energy, you have more civilization. When the Straits of Hormuz are closed, countries that have become accustomed to having certain levels of energy are getting less energy, or it's costing them a lot more money. It's not sustainable. It's untenable. So I have a little bit of I'm a little nervous about it's easy to be a doomer and be like, oh my God, it's all going to end. And that's not helpful. It's also easy to be like, I'm not sure it's going to happen, because no one really knows what's going to happen. But I do think that the crisis in energy markets is going to force some kind of more aggressive decision making. My personal opinion is that results in some kind of U.S. presence. I don't think we're going to invade Iran with ground troops. But I mean, they're sending the Marine Expeditionary Force there for a reason. These guys can't live on boats forever. And they're going there for a reason. And when you're in harm's way there, you can't, it's just the nature of things. Like, they're being sent there for a reason. And I think the idea of pressuring Iran, we've been bombing them now for a bit. We've killed a lot of their senior leaders. That I would call that max pressure. I don't know that they're going to radically change their demands. Just because the threat of deploying Marines on the ground. Maybe on some level there are aspects of the government that want troops on the ground, because it makes it that war that they've always wanted, that they think they're best equipped to fight, sort of that resistance war, that I think is sort of in the DNA of the sort of the infrastructure, inside the IRGC. There is this feeling of revolution, right? We're resisting, we're revolutionaries. Putting our people on the ground, helps to inspire that. There's already leaks in the press about, will the president take Kharg Island? Where are these Marines going to go? These leaks always presage something, right? You're vaccinating people. It's the inoculation strategy, right? To drip it out. And then one day, 2,000 Marines, hit the beaches somewhere. It's like, well, it's been happening for weeks. It's finally happened. That's just my sense. I think there will be some kind of ground operation. I don't think it'll be huge. But nonetheless, it's still U.S. troops. U.S. troops have not been on the ground in Iran since 1979 when they tried to rescue the hostages, right? It's been a long time.
Yeah. Okay, final question here. And this could just be a factor of kind of where my information is coming in from. But I've heard other people talking about this, which is there's a lack of sort of, reputable or trustworthy information coming out about what's going on over there, right? I'm curious if you want to weigh in on that. If you want to direct folks who are listening to this to, where they can find good information. It sounds like Doomsburg, is that what you said?
Doomberg. Yeah, I mean, he writes about energy. He's very sort of narrowly focused. That's hard. I think you kind of have to, if you're smart, you can curate different. There's no authoritative source, right? Maybe you could say that classified U.S. government reporting is the authoritative source. There's certainly at least some standards of reporting, when the government's doing that kind of thing. But I don't think there's an authoritative source. I think there are sources that have interesting insights into aspects of it. For example, there's been an internet blackout in Dubai. There's a lot going on in Dubai right now that people don't. is probably worse and not as bad as people think. You see some of the videos, right? People like sitting in cafes and the Shahed drones just flying overhead.
Yeah.
But that's the nature of war, right? At a certain point, you're like the shock is gone. You're like, people got to live. I've seen that myself, right? You'd be surprised if people can live with the kind of things people can live in. But I think it's a hard question to answer because it's you kind of want to. I think I read Al Jazeera, for example. I follow their coverage because I know it's biased coverage. But they're writing from a certain perspective, and you can draw conclusions from that. They'll talk about things that Western press won't cover, for example. I think some of the X accounts that clearly Iranian are just not helpful. It's propaganda. Yeah. But I think Al Jazeera is useful to read, not because I believe what they're saying, but they have access to sources and they're getting, they're hearing things that the rest of the world's not hearing. So I think they're worth looking at. It's important to read sort of regional papers in the Gulf. And you can actually have your Claude bot do that for you, right? Give me a rundown of the largest, the largest newspapers of each of the Gulf Arab countries and what they're talking about Iran today. You can do that. It's pretty useful. Yeah. But I wouldn't look for an authoritative source. The trick is breadth. And then you get your sort of where you think the truth lies.
Do your own research.
DYOR. Yes.
I love it. Okay, awesome. Next topic. We're cooking today. Zack, you spoke at and attended a sort of roundtable and demo day virtual event through Lightning Labs, talking about basically Lightning being used for agentic payments. And I don't know, maybe it was broader than that. So fill us in on how that was, what you talked about in particular in your portion, and what was kind of the most promising takeaway.
Yeah, shout out to Elizabeth Stark for hosting that. I think we have a real but sort of short-term opportunity to make Lightning an important part of the payment standard for AI agents. And I think Lightning Labs is out there leading the way. I briefly presented along with David Zell about our agent study that we've talked about on the show before. I think the important takeaway here is people are building all of these incredible things to make the Lightning Network usable for agents. And there were lots of people who presented and demoed really cool technologies. And there are all sorts of, one of my favorite parts of my job is, I get to meet and work with all sorts of cool people building really cutting edge Bitcoin stuff like, Fedimints and ARC tools and stuff like that. And I've always had this sort of doubt in the back of my head, this stuff is really cool and cypherpunk and cutting edge and works amazingly. But are you ever really adoption is hard, right? What they are doing is genuinely very complicated. I know you and I have talked about this before, with ARC in particular. And I say this because ARC is a big part of some of the new technology that Lightning Labs is rolling out for agents. And, there are rounds in the ARC and you need to this and that and the trade-offs and it works out very nicely, but it's not user-friendly. Kind of that all goes out the window when it's not humans using it and it's agents. And if your interface with ARC or similar complex technologies is just your Claude desktop app and you say, go do this and it just does it and you don't need to know how the ARC works, that makes that technology so much more powerful and just kind of solves the UI problem. And so I'm really excited to see what people build. It's easier than ever to build Bitcoin tools through vibe coding. And there's going to be just an incredible proliferation of this technology where AI both makes the production easier and it creates new demand by agents for these tools. And so really awesome to see over 100 people on the call, lots of demos of cutting edge tech. And this is definitely one of the most, if not the most exciting area in Bitcoin to keep an eye on.
Yeah, no, I think this is obviously a really interesting question and something we're thinking a lot about at BPI. And so, to know that others are working on it and innovating. The point I wanted to make, and then Ken, I'll jump over to you, is, one thing that I hear a lot about, or think a lot about personally is I think there's obviously this trade-off in almost every case between using Bitcoin in a sovereign or, privacy focused way and the user experience, right? There's just really kind of no good way to solve that. And obviously we have very talented people working in our industry to solve those problems, but it's just never going to be as clean as logging into Coinbase and, buying Bitcoin there, because there's, that there's that centralized layer that just smooths out the process. And so, I'm equally bullish as you are, Zach, on these sort of agentic uses of Bitcoin and sort of the larger like freedom tech stack, because they don't care about how the user experience is, right? They're like, does this do what I need it to do? If the answer is yes, they're going to use it. And, it has the benefit of being permissionless and uncensorable that these centralized systems don't have. And so they're almost more built for the robots than they are for the humans. And like, that's exactly, maybe not is exactly what we intended, but is exactly what we wanted. And so it's kind of beautiful to see it all come together.
Yeah, and by the way, it's not just fully agentic AI that's going to like reason for itself, like we talked about in our study of like, I'm going to use this. It's also just when humans want to use this technology, like you are going to use agentic AI to do that, not fully agentic AI. Just like you're going to use something like Claude Code, right? And just give an instruction in plain English, and then it operates the tool for you, even if it's not doing that like off on its own without your instructions. I just think that like, at the very least, AI is going to be the front end to everything. And so like that's been the biggest problem for blockchains is they're a nightmare to use. And like, I just think AI has like fully one shot at that problem.
Yeah. I mean, it's like almost the same thing with coding, right? Like coding has like forever had a user experience problem. Like you have to learn the coding language and then you have to debug and you have to do all these things. And now, Zach, you and I and Ken, we can all write code in plain English, right? Which is just has never been true before. And so I think it does for using complicated Bitcoin tools like, Arc and, Lightning at large, what it does to writing code. So I'm really excited about that. I'm glad folks like Elizabeth Stark and her team at Lightning Labs are making that a priority. And obviously we have our part to play in making sure that kind of innovation doesn't get trampled on. So Ken, I'll let you weigh in here.
The interesting thing that I've seen is it's actually the Bitcoin and AI argument that actually gets eyebrows raised on Capitol Hill. Because right now you talk to staffers and they're like, crypto de minimis, they just sort of slouch. Oh my God, what do you want? But the idea, and it's not necessarily just Bitcoin as the preferred currency for AI, but it's the what it isn't. Because I think there's sort of this there's a predilection for stablecoins. But when you walk people through the fact that stablecoins are not chain agnostic, that you can't send USDC on Ethereum to someone who has, who's using Solana, for example. These are also private companies. I know that Coinbase is working hard on an agentic native protocol. I'm sure it's going to be fine. But will the rest of the world want all their agentic commerce running through a private corporation based in the United States? I don't know. The fact is, though, that if you choose stablecoins as the preferred medium of exchange among agents for roles that agents will play, you're necessarily going to force centralization because they all need to be able to talk to each other in different ways. But there is one option that is peer-to-peer. It is decentralized and it travels the world, and it's Bitcoin. It's interesting. I even had a tax staffer asked me. He said, "Yeah, but aren't Bitcoin blocks slow? And what does that mean? And won't fees go up?" But it was a good question from a tax staffer. And, I kind of gave him the really high level lightning. Said, no, well, here's the thing. Yes, Bitcoin blocks are slow and limited and for all kinds of reasons. But lightning nodes can scale. I mean, infinite's maybe not a great word, but they can scale. And you can have every agent in the world running, if it wants to, running its own lightning network. And you can have agents running nodes. You can have agents bouncing channels. Kind of like water spreading across the landscape, right? You're not limited like you are in Bitcoin block space if you're to expand the Lightning Network. And it's fascinating to watch otherwise browbeaten staffers perk up because it makes perfect. It's very intuitive. It makes sense that stablecoins are not actually a great option for agentic native commerce. It makes sense that approach would necessarily lead to centralization, and that centralization might even just be through private companies. It makes sense that you have a digital currency that exists and that is digitally native and has no central issuer and can travel the world. It makes sense. And when you get eyebrow. And when you can tell in these meetings when they're, okay, yeah, Bitcoin's very important. And they kind of like, walk me through that. And the fact I got a question about fees and Bitcoin block space, you don't often get like wins, but I walked out of the office and I was with our colleague Eugenia, and we were like, wow, that was actually really good. We're happy. But it does. I mean, the Bitcoin and the agents really is a compelling argument, and it matters for de minimis, by the way. How many of you are waiting for your tax returns? Imagine when your agent is transacting, 50, 60 thousand, how many times a day, and you've got to, file that with the IRS. Good luck. So there is, I think we're encouraging people to think through like at least the next year about where we are at the end of this year, because this is going to be happening. Like, I think, maybe not a scale, but it's going to be happening. So let's do it right now. I was lucky because I went to the Bitcoin Veterans Summit in Nashville last November, and Arc Labs was there, and we actually got to play with, they gave us, experimental coins, but it was actually, when you use ARC, it makes sense.
Yeah,
I agree. As you walk through it, and there were a bunch of us in the room, and it was a Bitcoin conference, right? So these are people that kind of get Bitcoin. We were like, really?
Yeah.
Explain it. He's like, just here it is. Here's your wallet. Download it. Here's some some test coins. Play with it. And once you do that, it makes sense. But yeah, it was good. It was good to have. You're lucky you have someone actually from Arc Labs who spends an hour with you, like, okay, like retard, like let's walk through this. But yes, I got there. I think it's really cool, and I think for agentic commerce, the agents, whereas it takes me like a long time to understand anything, the agents should do it, significantly faster.
Yeah, I did some work with Zack at his law firm last summer, and one of the kind of like regulatory questions that he asked me to answer, this wasn't for a particular client, but just more out of a legal curiosity, was how do sort of like money transmitter rules and existing intermediary rules apply to something like ARC. And so I went through all the like VTXOs and it's a little bit blurry now. It's been a little bit, but it was one hell of a question to try to answer.
Yeah. No, having the guy, I forget his name, from Arc Labs actually walks through was actually quite helpful.
Yeah. No, it's a beautiful technology, but it takes a sophisticated user, and fortunately the AI is more sophisticated than I am. So yeah. Okay. Zack, I want to move on to the next topic here, a CFTC staff letter. Basically, they issued a no action letter to a company called Phantom Technologies. And I think the gist of it was that this particular letter recognized, what we might say is like a principle of digital asset regulation, that providing software to users to access regulated markets, right? So we're talking about sort of perfectly above board things here is not the same as operating a regulated intermediary. I'm not totally clear on kind of like the Bitcoin implications of this. Is this just sort of a broader policy win of them getting something right, or is there more here than maybe meets the eye?
It's funny. Only on a Bitcoin podcast would people not be very familiar with Phantom Technologies, which is like extremely popular. So outside of Bitcoin in the crypto world, what is really popular right now is perpetual futures, which is basically a type of derivative that's only really possible using blockchains. It doesn't exist in the natural world. And Hyperliquid in particular is a protocol that has gained, pretty meaningful product market fit to trade perpetual futures, which are futures contracts that don't have an expiration date on things like, the Bitcoin price, right? Is Bitcoin going to go up? There, you can buy a perpetual future on that. Phantom, I forget what you said the name of the company is, but it's the company that makes Phantom Wallet, which is the most popular non-custodial Solana wallet. And it's, widely regarded as like one of the best non-custodial wallets out there. It's easy to use and you can do lots of cool stuff. One of the things that you can do is you can use your Phantom Wallet to interact with perpetual futures, DEXs or protocols on a non-custodial basis. And so the question here is like, and by the way, like futures are heavily regulated in the United States by the CFTC. in some cases by the SEC. But the question is, because you can use your Phantom wallet to directly interact with these perps dexes, are they acting as a broker? Because you are using Phantom in the way that you would use an exchange like Coinbase to get access to stuff, or a commodities brokerage to get access to CME futures. But even though that's kind of what it looks like on the surface, what's happening on the back end is it's just sort of blockchains and smart contracts, and really what's between you and the person on the other side of the futures trade is really just code. So we don't have perps dexes on Bitcoin yet, so it's not directly applicable in that way. But at a higher level of abstraction, what we're talking about is peer-to-peer technology, right? It's the same question in the Samurai Wallet case and Tornado Cash case, and in the Coinbase case with the SEC about, is the Coinbase wallet a securities brokerage if you can use it to access dexes that have securities listed on them in a non-custodial way. And so this is an acknowledgement that when you have basically what is a peer-to-peer transaction mediated just by code in the form of blockchains and smart contracts, that is not the same as a commodities or futures brokerage, even if the functional result is the same. And so that is good. That's what we want to see from regulators, and that broader, more abstract principle is absolutely applicable to Bitcoin and non-custodial Bitcoin tools broadly.
Yeah, no, I think this is obviously a great development, and among other things that I think have come out of the past couple of weeks that are really, good to see. I'm just looking at the press release from us at BPI. We urge, I'm quoting here, we urge Congress to codify this approach in the Clarity Act and to recognize the distinction between code and control is not just a crypto issue. It's the regulatory question of the next decade. So again, like really bullish stuff here. Thank you for breaking it down.
So I wrote the statement from BPI. What we mean by the regulatory question of the next decade is coming back to this crypto is merging with AI,
right.
Like these questions of what's the difference between like activity that normally a regulated financial services firm would do and stuff that is now happening on a peer-to-peer basis, or even on just a fully automated basis through AI agents. Like, we need to get that right now, and we need to not create regulatory landmines that are going to just be a huge problem for us when we have like agentic commerce.
Yeah. Ken, do you have anything to add here?
It's just I remember when I saw that, there's some developers sweating, right? Like this is a couple of years ago. All of a sudden, it's not what they got. It's an investigation or indictment. So I just underscore what Zack said. I mean, I think you actually can store Bitcoin on Phantom. It's a hot wallet. It is pretty functional if you tinker with it. But I think the larger question is it again establishing just another piece of precedent that code is what code is. I can imagine even the very question of being reviewed for something like that. Imagine if you're a developer working on Phantom and you're a couple beads of sweat because there was a precedent for putting people like that in jail in this country. So that was good to see.
I just checked my Phantom wallet, and it's a collection of cat meme coins that are down 99.9%, and a pre-seed investment I made in a 100x perps dex that is not very popular. So I'm not doing great on Phantom right now. But then I also looked at the Bank Policy Institute tweet, and we have a 400x like ratio. They've got 25 likes, and we've got 1,000. So
that's beautiful.
Thank you, plebs.
Thank you, plebs.
I think it was. I think if you scroll down, it was the best tweet they had put out in years. Like they usually get a couple hundred views. They were up in the 25,000s or something. So
which is a 40x. I'm bad at that.
It's okay. You wrote a great letter here, statement on the CFTC no action letter. So we'll cut you a break. Actually, we should probably talk quickly about Sam, who's new to our team. Sam Lyman, BPI's head of research, former speechwriter and senior advisor at the Treasury Department, working with Secretary Bessent. Big win for the team to have Sam, joining us. I think that happened since the last episode. So, Ken, maybe you can introduce him. And then the thing I want you to touch on briefly is there was a meeting that he attended from the Federal Reserve talking about the Basel III financial regulatory framework. talking about sort of banks and their reserve requirements. I think we did talk about this a little bit ago, and the Fed obviously weighing in on that. So, yeah, if you can introduce Sam to the audience, I think that's worth talking about, and maybe we'll get him on the show at some point, and then talk a little bit about this this Fed meeting that he went to.
Yeah, he kicked off and he jumped into the deep end of the pool. Basel, and capital requirements of banks, like really, really, really sexy stuff. Although very important stuff. So yeah, just to people who don't know Sam Lyman, he does, if you Google him, among the things you'll find is he writes a column for Forbes magazine. He's done that for a bit. He previously, he worked on policy issues at Riot, the Bitcoin miner. Really, really well regarded across the Bitcoin ecosystem, such that he was offered a position as a speechwriter actually for Secretary Bessent, which he did for about a year. And then he, just because he is a true blue Bitcoiner, when you meet him, you talk to him for 5 minutes, that comes right through, because he's a true blue Bitcoiner. He did his time in policy. I think he deserves. He's one of the sort of the unsung heroes, like behind the scenes, battling sort of the career treasury people that just still don't like this whole thing that we're doing here. But at a certain point, he did his tour of duty, and he's looking to cut back to the Bitcoin community, and joined us just a few weeks back as our head of research. So it's great. He's a wonderful guy, knows a lot about Bitcoin. He's really deep, sort of intellectually, and now he just comes out. He has sort of fresh impressions of what's happening at the Treasury Department and across sort of the executive branch. So huge find. You'll see him. We'll get him on the pod, and he's still writing. So he's still doing some of his writing. So we're lucky to have Sam. And a lot of you will probably recognize his name, if nothing else, because he's been on panels and he's been around. He's been in the zoo for a bit. So if you see him, you might recognize him. But yeah, so he attended a meeting. So Basel, of course, these are agreements that, among other things, regulate set standards for capital requirements for banks. As in, for example, if you want to hold certain assets on your balance sheet, what kind of capital is required to do that? The understanding being that there is certain assets have risk. It really, on some level, is a risk weighting. When you assign a capital requirement, you're assigning a level of risk. A lot of Bitcoin loan companies, for example, will require 150% capitalization of Bitcoin, right? When you borrow money from them for your Bitcoin, because it is a volatile asset, and they want to make sure they're trying to avoid liquidations. It's not exactly the same thing, but it's a similar idea with banks. What the Fed was discussing and what BPI actually put statements out. This was about 10 days ago, maybe it was last week, but recently, you've seen on our X account. The capital requirement account for a bank to hold Bitcoin was 1,250%. That what it was? 1,200 something percent. Really, really high. Again, I accept. I've been in this business for a bit. Bitcoin is volatile. I get it, but it ain't that volatile.
Yeah.
So really, what the takeaway from that was that it was a prohibitive capital requirement for preventing banks, essentially strongly discouraging banks from holding Bitcoin on their balance sheet. I mean, who's going to post 1,200% capital to hold something on your balance sheet? It doesn't make any sense. It's prohibitive. You almost can't make money. Maybe you could have made money back in like 2014. You can't really do it now. I don't think we're going to see those kind of moves. So the Fed, but it's a proposal. It wasn't these are new requirements being set forth by the BIS, the Bank of International Settlements, which of course, as some of you Bitcoiners will know, is the central bank of central banks, based in Switzerland. Consistently been a problematic force in keeping Bitcoin out of fought tooth and nail to keep Bitcoin out of the TradFi system. These capital requirements are just the latest attempt. Of course, we put out a statement about that. It got some good press, but really the important thing was raising awareness, because this is the kind of thing that happens where members of Congress don't have a say. Even like necessarily people in the White House don't have a say. These are requirements that banks do amongst themselves. Of course, the Federal Reserve, though, as our central bank, has a say. So there was a hearing, not really a hearing, it was a public comment opportunity. Sam attended, represented the community well. Idea being, though, I understand that like there's going to be there's requirements for everything, capital requirements for everything a bank holds, but 1,200 plus percent It's clearly punitive, and it's not acceptable. So we've been fighting that fight, and we'll continue to do so. The curious thing we'll see is if we get if Treasury weighs in behind the scenes. Of course, they won't do it publicly, but we'll see how that plays out. But it's terrible. That's sort of like that's mafia level. It's not even mafia. The mafia wouldn't charge that much money, right? Like, come on. It's a huge vig.
I love it. There was a good tweet from our colleague Connor, and he shared with the community that we will be publishing a comment or submitting a comment to the Federal Reserve, and the primary reason being, hey, if this administration, or let's separate it a sec from even this administration, which we know the Fed to be a supposedly independent organization, that this is like just crucial for America's success. And if we're sort of intent on having free and fair access to the banking system, that sort of implementing these particular guidelines from the BIS would be shooting ourselves in the foot. So Zack, I'm curious, you can broad strokes us here, or you can dig into the details of this particular situation, but what does it mean to submit comments to an organization like the Federal Reserve? What kind of power does BPI have to persuade them? And do you think they're going to get this right?
Well, we don't have power in the traditional sense at all. It really is the power of persuasion type of power, and I suppose it depends how well we do at what we write. I have to say I'm not hugely optimistic about this. Right? Like the idea of the sort of 1,200% reserve requirements is something that you like truly can't price how liquid or backed it is, like weird, like GFC era mortgage-backed securities for subprime loans. As we've talked about on previous episodes, like that just doesn't make sense to apply that analysis to Bitcoin, which is very easy to prove that it's there. It's a commodity that should have a 0% requirement because you either have it or you don't. I suspect that Bank of International Settlements, et cetera, like they already know this, and so this is punitive. And so we at the Bitcoin Policy Institute, who are pro Bitcoin, saying that we should say it. We should put it on the record. Hopefully, other people in government will notice. But I don't think we're going to be directly persuasive to our audience.
Fair enough. Okay. Next topic, Zack, I'm going to go back to you again here. I want
to talk about the Bank Policy Institute's tweet they put out, trying to shame us for being the second BPI on the block. And then props to the Bitcoin community, because we joke now that some of you, there was a commentator who, someone on Twitter said, it's not fair to two BPIs. You guys, someone needs to change your name. And Bank Policy Institute, in perfectly good nature, said, Bitcoin Policy Institute, we were here first. And then, we dunked them with a little bit of a blockbuster meme. And then the community stepped up. So we joked that the next day. Yeah, that next morning stand up, that one guy was like, "I told you not to freaking mess with these Bitcoiners on Twitter on X. This is what they do all day long." It was great. So thanks, plebs, for stepping up. That was a lot of fun.
Yeah, we might have been trouble on Blue Sky, but on X, we
a lot of fun.
We own that territory.
Yes,
no, that was awesome. If anyone hasn't seen that, head to our X page. Ken, hopefully you're ready, because we're putting you right on with a rundown on what's going on with the Bitcoin de minimis exemption. There was a big kind of scuffle on Twitter. Our friend Marty and TFTC put out a tweet that said, hey, Coinbase is going after the Bitcoin de minimis exemption, that they're out on the hill and they're saying, we don't want this. We want, stablecoin yield, or I can't remember exactly what the tweet said, but it definitely caused quite a kerfuffle on Twitter. So, Ken, I think baseline point one here is clarifying the difference between the market structure legislation and the tax legislation, because I think maybe there's a little bit of a misunderstanding about that. And then if you can give us a sense of kind of, what the prospects are for a Bitcoin de minimis exemption if and when we get to a tax bill.
Yeah, it was a bit spicy. Was it last Friday afternoon? A little bit spicy, but I think and again, it's not like my my wife always attributes motivations to me that she somehow knows. So I try not to be in the habit of attributing motivations to other people that I don't know about. So point being, though, that there was an accusation or suggestion, maybe suggestion is a better word, that Coinbase was lobbying against de minimis exemptions for de minimis expenditures of Bitcoin in the crypto tax bill that is just starting to circulate on Capitol Hill. There's a version in the House that was sponsored by Congressman Max Miller from Ohio, and then Senator Daines from Montana is on the Senate Finance Committee, is the lead on the Senate side. Both offices of which have telling everybody that this is early stages, because the initial bill that was put out only included de minimis exemptions for stablecoins, which seems counterintuitive. Why would you need de minimis exemptions from capital gains taxes for dollar-pegged stablecoins? Turns out that was just a starting point. And again, because I don't like to attribute motivations that I don't know about, I take them at their word. But again, because there's and this sort of gets into the whole battle fatigue on Capitol Hill, and battle fatigue is really the word on all things crypto legislation. If there is confusion between market structure and de minimis, I mean, I maybe to be expected or forgiven, because there's been so much colliding dialogue about all these things on the Hill. They're separate topics. Market structure legislation, of course, is intended to help crypto companies establish their businesses here. It regulates what's security, where authorities with SEC and CFTC lie. Market structure, as listeners of the podcast know, is also where the Blockchain Regulatory Certainty Act resides, which is near and dear to our hearts, which we can talk about. But de minimis is a separate bill intended to address the issue of crypto tax. It is specifically a digital asset tax bill, other provisions, but primarily to allow people to spend small bits to regulate the ability of people to spend cryptocurrency without incurring capital gains taxes. It's been something that Bitcoiners have wanted and sought out for a very long time. We've made the case sort of on the velocity of money side that if you want economic activity, that there is a lot of money on the sidelines not being spent simply because it is not tax advantaged. But we're not there yet, no. But where we are at, though, is, and BPI's objective is to establish the precedent. It doesn't really matter. People get caught up on the numbers at $300 exemption per year. Is it $600? We want more. But the point being, though, it's very important for us to establish the precedent that Bitcoin can be spent in small transactions for people buying coffee or T-shirts at the Bitcoin conference. It can be spent without incurring capital gains taxes. There's a bit of a hill to climb to the point where the discussion started about stablecoins. It's like, staffers, do you recognize that when you spend a stablecoin, you're also spending the underlying network token? People know that now, but that wasn't clear to a lot of staffers at the outset. We've made the case that Bitcoin, as the largest digital asset, we think, of course, it's unique and separate, but nonetheless, from the regulatory perspective, it's still in the same bucket. The largest digital asset, and we think deserving of that recognition should result in some de minimis in a certain de minimis exemption. And on the Hill, they get really wrapped up around what the number is going to be. I think we're really focused on the precedent. This is not the first time Congress is going to pass crypto tax legislation, but what we don't want is that first bite of the apple not to include Bitcoin.
Yeah, that's great. And of course, we don't know what conversations Coinbase was having on the Hill. I think Marty.
We do know that now. I mean, their policy people have talked to us. They've stated publicly that they are supportive of Bitcoin exemptions. So for this point, we take them at their word, and we are looking forward to collaborating with them on this issue.
Yep. Zack, I'm curious if you want to weigh in on the de minimis question. If you think this is kind of getting blown out of proportion for social media, engagement, or if you think there's a real something here. And then if you want to also weigh in on kind of the status of market structure, I'm sure folks would like just a quick rundown on that. Yeah,
I mean, it is getting blown out of proportion on social media, mostly because people are conflating it with the market structure bill, and they're saying that this is the big crypto getting into the Clarity Act and doing anti-Bitcoin stuff, and that's not what it is. These were two separate bills. I do think de minimis is, it's important. In addition to buying T-shirts at Bitcoin conferences, which is nice, it's important to remember that Bitcoin is a medium of exchange, especially in sort of developing countries around the world. Now, they may or may not be subject to U.S. taxes, but I'm sure there are some edge cases where those two phenomena intersect. And also, there's sort of this growing theme of Bitcoin and crypto being accidentally built for the agentic commerce era, and I think that like de minimis tax gains or losses is just an easy gotcha for machine-to-machine payments, and it's important to sort of clear that out of the way before that becomes much more widespread.
Yeah, I've definitely seen a couple tweets. I saw one today from our friend Parker Lewis, who said, BPI should sort of, say no to this bill or walk away, or I can't remember how he phrased it on the market structure question. But I think there was some other things that he was actually making reference to. Ken, did you see that tweet earlier?
I did not see his tweet, no.
Okay. I think his basic point was that like even the BRCA as it stands right now is insufficient. But yeah, I guess I'm just curious if you want to give us a quick rundown of where things stand. I think there was actually a really interesting confirmation from Senator Lummis, I think in response to our friend Frank Corva, where she said, hey, the BRCA is still on the table. It's still in the bill as it stands. And if anything were happening to that, surely I would know about it because I wrote the bill. So very good comment, but yeah, what's our status? Are we still kind of looking good on that?
Yeah, I mean, I'll leave it to Zach to talk about sort of the discussions around 1960. But I think so. I mean, the holdup has been that though. I think we're still on track. I think again, the Senate's different than the House, right? If you have one stubborn member who is insistent on something, who's on the right committee, that ripples across the entire Senate. It's not like the House where it's sort of radical majority rule. Senator Cortez Masto from Nevada has expressed concerns over 1960, which is affects money laundering and money service businesses. Zach's better position to talk about the details of that. But she's a former attorney general. The attorney general and some aspects of law enforcement have made a big push that this will somehow remove a tool to fight crime. And that's always right. That's always the fighting crime. Everybody supports fight. Well, most people support fighting crime. As the attorney general, there's the National Sheriff Association. But I think there's some debate about whether that's actually true or whether it's just removing sort of a negotiating tool for prosecutors. But again, I'll let Zach talk about that. This has created some kind of unlikely allies because there are parts of the crypto. Bitcoiners on the whole have not really cared much about most of market structure. But we've seen big pieces of the crypto industry come out because they are concerned about BRCA because that affects their ability to build things and pump and sell, right? To create protocols to sell to retail. So there is sort of a broad alliance, which I think we were worried would not materialize. They'd be more focused on some of the other regulatory aspects of the bill. But we see it now. And again, I think Zach's probably better suited to talk about 1960 and what people are saying it will do and what it actually probably won't do.
Go ahead, Zach.
Section 1960 is a criminal statute that criminalizes unauthorized money transmission business. And what the BRCA does is to say that if you are a non-custodial developer service provider, you are not in contravention of Section 1960 because you're not transmitting money. You're just building software that other people are using to transmit their own money. I understand from like a law enforcement perspective why one might feel that not applying Section 1960 to non-custodial tools takes away some tool that law enforcement would have to put people in prison. I have to say, I just have zero sympathy for that because non-custodial developers and service providers just aren't transmitting money. So yes, there is a tool available to you when you don't like that criminals are using non-custodial tools to throw the developers in jail for a crime that they're not guilty of. But that's not how America works. It's just it's an illegitimate tool that I think they legally don't have now, and clarifying that they don't have it. I'm sorry, that's just important. And this really shouldn't be controversial. There's not a legitimate reason for this to be controversial.
Great. Yeah. So big takeaway here, de minimis is a separate issue than market structure. That's kind of the next proposition. So again, if anyone's unclear on that, that's not kind of currently being discussed in any significant depth, though the first draft of those of that piece of legislation is being circulated, but it's definitely not sort of being discussed at any significant level yet.
But I don't want to understate the importance of de minimis. Right, the way the House Ways and Means Committee is working on this. They're meeting with. We've met with many offices. We've met with the committee staffers. On the Senate side, Senator Daines is the lead on this issue. We joke that he took this on and then announced he's retiring because 60 days of getting crypto lobbyists at your door. He's like, no, tapped out. I don't blame him. But so it is. I mean, there is on some level an institutional desire to get this voted on this Congress. I don't know if it's going to happen, but I would suggest that people don't sit on it. If you're one of the people who's inclined to call your representative, let them know that you think this is an important issue, that Bitcoin should be considered money for de minimis purposes. But it is certainly it's different, and it's far more nascent than the market structure bill we've been talking about since seemingly forever.
Yeah,
for a long time,
for sure. All right, well, good rip. I think we covered a lot today, and we'll be back next week. So see everyone then.
Peace.